Oh, everybody's here. Hey, everybody. Good morning. It's Thursday, 8 o'clock out here on the West Coast. This is Gil. Dr. K, are you there? Don't see him. Can everybody see my screen okay? Here it comes, yeah. Anyways, you guys know what I'm doing. Chris, we always get a lot of questions about what should I do going into the jobs number? How would you handle it? Well, I was playing some guitar there, and the guitar, if you can tell, needs new strings. But anyways, that's what I spend my time doing, trying not to watch the market, just sticking to my alerts on the sell side. And if I pick up an opportunity here or there intraday, then I might try and come in if I see an alert. Otherwise, I'm just trying not to watch things and get caught up in the day-to-day news. I think Dr. K is doing the same thing. Let me see, where is he? Is he there? I still don't see him in there. We better get him. He's probably, for all you know, he went down to the sauna. He says his mic is not working. Uh-oh. Well, see if you get your mic working, and let us know what's going on, Dr. K. So in the meantime, I think I can carry on for now. I'm probably going to spend the rest of the day changing the guitar strings on that guitar. It's actually a pretty funky guitar. For those of you who do play guitars, it's made by John Cameron. He made it for me. It's a really bizarre-looking, organic-looking guitar that he uses lasers to cut out, and they come out looking like sort of like organic shapes, like seed pods with the guitar neck on it. So it's kind of a cool guitar. The cool thing about that guitar, and one of the reasons it's one of my favorites, is that it was built at the exact same time, and therefore it was sitting on the same guitar workbench as a very similar guitar that the guy John Cameron was building for Ted Nugent at the exact same time. So this guitar was laying next to Ted Nugent's guitar and was built at the same time. For all you know, the same piece of sandpaper touched both guitars. So in any case, Ted Nugent, I hope there's some Ted Nugent fans out there. In any case, you can see this chart I got here up on my screen. What's the market doing? Going higher on higher volume. Okay, that's it. What else do we need to know? Do you own some stocks? Where are your stops? Do you have them clearly in mind? You know where you're going if certain things happen. Do you have your plan laid out? Otherwise, you shouldn't be thinking too much unless you're trying to buy some new positions. And there have been some things at 5 points. But for the most part, the market's in an uptrend. The market direction model is in a buy. Dr. K, we can hear you tapping on your mic. How's that? You hear us?
Yeah, we're good. We're back on.
Cool. So I was just, as you heard, I'm just trying to emphasize the fact that there's not really too much to do. I'm sure you're probably working on some piano over there.
Yeah, some of it.
Yeah, so we got our alerts set.
Trading day.
You just got our alerts set. We're just hanging out and letting things kind of unfold. We don't worry too much about the jobs number tomorrow, because if the jobs number is so bad that it's everybody sells out of the market, then your stops will be hit and you're gone. That's all you need to know. Otherwise, if you're trying to anticipate things, you're just going to screw yourself up. I mean, you can see here the market's in an uptrend, up on up volume. What else is there to know? You can look at the S&P. And more or less the same thing, but you didn't have higher volume yesterday, but on what day is that? Tuesday, you got a pickup in volume. Looks like stalling, turning, but in the context of this move, and everything's contextual too, this is not really anything to worry too much about. A couple distribution days after you've run up, that would be normal, and you would probably want to see something like that. And if you're going to go higher, you need to kind of clear things out a little bit. So that trend's intact, and so all we're doing is we're set with the problem of finding stocks to buy, taking positions, sizing them properly, and then trying to hold through and sticking to our rules, okay? So that's all you're really doing. So let's just get to some stocks. Getting to this thing, I thought it was interesting yesterday, and I get this one a lot, actually, and people will say, the market's up 120 points, but my stock isn't doing anything. Should I sell it and go buy something that's moving? No. If we look at, and if the one they were talking about was Monster. Monster was doing nothing. So you can see here, this is yesterday. It was flat. Okay, no big deal. You have a little bit of volume pickup, so you get a little, support off these lows. And it's been hit with a couple of analyst downgrades on valuation, which is very typical of what analysts do. That's, all they know how to do in any case. But they certainly don't know how to make money. And you all know the story about the analyst I had hired back in 2004 who told me Apple was fairly valued in October of 2004, 37.50 a share, and stock eventually ended the year around 90, I believe. But in any case, analysts downgrading Monster, and it's just coming down along the 10-day moving average, and they may need to just go sideways. It tends to be a little bit of a slower stock, but a lot of times slow stocks can suddenly blossom, and they take off when you least expect it. This is one of the more cleaner moves you've seen in Monster after a breakout. You had a viable gap up, you run up. Now we have these ants, so 12 out of 15 days up in a row, that's pretty strong in general, and so you might expect it to turn around and come out at some point. But if you're in here, you're buying here. There's no real add points in here, so you're just kind of watching how it acts in here. Maybe if you had a pocket pivot off of the 10-day, you could be adding. But for now, we have an initial position here. We're just sitting with it. We don't really worry about it. The other thing is just because the stock isn't moving on a day when the market is moving, that's not a big deal. It really doesn't mean anything. Leading stocks often are up, and for example, the market's relatively flattish today. But where's Monster? Monster's up 1.46, whereas the Nasdaq's only up 0.66, the S&P's only up 0.31%. Nobody worries about that. When it's up nicely and more than the market on a day when the market's either flat or down. So it's not really a factor. You have to learn to sit with your positions, even though you might be tempted on a hot up day to move into something else because your Monster isn't moving. And I think that's an emotional decision, and it's a bad decision. Dr. K, you have any comment on that?
There's a saying of Livermore used to talk about, don't let every little day and every little wiggle in the pattern make you overthink. Sitting tight means being able to take each day for what it is, and most days are not very important in the life of a stock. If it's trending, it's trending, and learn to watch for signals that are red flags or yellow flags in the pattern. So far, there's no red flags or yellow flags in Monster, so there's no need to get antsy about it.
Yeah. So just hang out. It's acting fine. We're just holding ours. And I know the urge because I like to get into these hot day trades. If I see something get knocked down and I think it's a silly pullback, I'll come and jump all over it. And sometimes they turn around and go higher and I make some money. Sometimes they just keep going lower. So I think steady as she goes really is the way it's going to make you money. So I really think that's what you have to be focused on, and not necessarily what's going to happen tomorrow, because we know we're looking at 170,000 jobs, I think, is expected. So the other thing to keep in mind is watch when they report that number. They will also announce the 95% confidence interval. And in recent numbers, that's been somewhere around 180, 185,000 jobs. And what that means is they are telling you what the number of jobs created is within a range of with a 95% certainty that it is within plus or minus 180,000 jobs. So really statistically meaningless. Is that right, Dr. K? Am I reading that right?
Sounds about right.
Yeah. So so it's all make believe anyway. So why worry about it? Just watch the stocks and watch the price action. Anyways, today this is my portfolio. Today I hope you guys are all long these stocks. I bought all of these stocks yesterday at the close, and I'm in 600%. I got my broker to give me extra intraday buying power, and so I'm up like 50% on the day. We're rocking. Now, actually, what I did is I put the best performing stocks on my buy list right now, which is about 60-something stocks up here, and to see what's moving today. And so, obviously, Green Mountain is rocking. And hey, Dr. K, is that a viable gap up? No.
On Green Mountain? No. There's too many defects prior to this gap up. I mean, the big one being in November. So you want to stay away from this for now.
Okay. I kind of like the action in MA here. It's running into some resistance overhead. I don't think it's a viable gap up. I don't think it was enough for the on the ATR, but I might be wrong. Let's check this out. 962. How much did we gap up on there? Closed at 35762. Open at 367. Yeah, that's just enough. That's just enough. But
it is enough to qualify, but it's not a high-quality viable gap up is the problem.
Yeah, and the other thing is you're coming up against this resistance on the left side. You kind of saw that, with Lulu, and it pauses for a little bit, so it may go sideways, but it eventually comes out of there, and Lulu's trying to come out. I'm actually going to be on WBBM Chicago Radio at 10:50 Pacific time today on Stock Doctor. Usually Dr. K does that, but I've always wanted to be a doctor ever since I was a little kid. But I guess I really would like to be the stock cartoonist, but I don't think they really like that. But anyways, I'm going to be on that segment today. Somebody wants to know what my guitar looks like. Okay, I'll show you. Let's see. That's it. That's pretty much, it looks a little bit like that. The only difference is I have a maple neck. This is a rosewood neck. You don't want to have rosewood necks these days because if you try to take it on a plane or traveling and somebody catches you with it, they might find out that the rosewood used in there is from some Brazilian rainforest and they'll arrest you for, I don't know, eco crimes. So you got to watch out for that. But other than that, you can see how it's cut with laser, and so it has this kind of organic look to it. And it's really a funky guitar. It can be an acoustic or an electric. As you can see, it's got pickups and all, but it's really funky. I kind of like the action. I just use it to tool around with when I'm trading, so I don't look at the screen. So it's kind of my anti-obsession with the market guitar. In any case, get that out and get back to business. All right, what else is moving? LinkedIn coming out. The Facebook thing. You had some pocket pivots in here. Here's one bottom fishing pocket pivot there off the 50-day. You might say here's one through the 50-day. Here's one off the 50-day slightly, and the 10-day coming up through the 50-day, but it's going up through the 65-day exponential. Notice how it holds that 65-day exponential pretty well on the pullback, and you have this little pocket pivot, but it fails. Now it's coming out again. Of course, the big news is Facebook. There's really nothing to say about it other than, I might be on Fox on Monday talking about it, but the whole idea is just go back and look at other big IPOs like Google in 2004. They set up, look at Baidu. Remember Baidu when it first came public? That was a huge, exciting IPO, and I remember I was actually in Maui when they came public and trading a thing on that first day in my hotel room. Just showing how obsessed that I was at the time. But in any case, I'm going to go back to this. When was it? That was in 2005, I believe. And you just wait for these things to set up. So they might, Baidu had this big wild day, and if you were a day trader, this is like after a 10-for-1 splits. I think something like that, maybe a few splits. But it took after that one wild day, it took a long time. You had one move up the right side, but there was really nothing there. And then it took all this time to set up again, and finally it moves out. Google, on the other hand, was a situation in 2004 where, what's better to look at here is, look at the weekly chart, because it's the IPO U-turn. And basically, there was offer. I think what was the IPO price on this Dr. Can, the Dutch auction? It was like $85 or something like that.
Yeah, something around that level.
Yeah, so you could think of this as a flagpole. Yeah, so you can think of this as a flagpole, and it's a high tide flag, and boom, it was out of there. So I was actually buying it. I remember 108, up to 112 on this week in here as it was moving higher, and that was a nice move to play in 2004. But it's they either set up or they don't. I mean, recently we've seen hot IPOs like LinkedIn look great, and we were dumb enough to buy this here, I think. And when I look at it in hindsight, it was kind of dumb because it's a V-shaped pattern. I can make it less V-shaped though, but it's hard to get away from it, because in terms of number of weeks down and up, it's just straight down, straight up, and this looks like a handle, but it's not. It's a 1 week handle, tries to break out and fails. That's pretty much it. It breaks down. Now here we are coming around. Maybe, like the Baidu example, maybe LinkedIn, after the IPO never really did anything. Now it just comes around. So that's how you handle IPOs. So we're not really going to worry too much about Facebook until it comes public and we're able to see exactly how the stock acts and where it's trading and all the other stuff. But it looks like a pretty good business with, I guess, $3.2 billion in revenues, and they make $1 billion in profits. I don't know. Is that excessive? Shouldn't we have the reasonable profits committee that Obama has looking into these people? I don't know. They must be evil, clearly.
Yeah, we need caps on everything.
Oh yeah, and that Facebook, what was that, 30% margins? Am I doing that right? God, and these oil companies, I mean, the evil oil companies making 7-8% profit margins. I don't know. Somebody needs to get on them. Okay, let's just go with what's more safe, you know.
Facebook actually leads the market in terms of pay-per-click ads and in
Yeah,
terms of targeting. So
it's a real business.
they really have a monopoly. They have a natural monopoly earned by virtue of their ability to keep their website so all-encompassing so that the average time spent on Facebook is dramatically higher than the average time one spends on, say, Twitter or YouTube or any of those other social networking sites. And I think that's really where Facebook is far and above. I mean, there's really nothing else out there like it, because now you can chat, you can trade videos, you can trade pictures, you can pretty much do everything you want on Facebook now, including internet searches through Yahoo's Bing system. So they really, I mean, they're moving very quickly. They know how fast they have to move, and they kind of strike me as, in a way, you know, very imaginative and creative, like the Google guys have been.
Exactly. Anyways, okay, so where are we? Where are we? Celgene's one side I've been keeping an eye on. Like, it's moving up today. It just missed kind of a pocket pivot. Man, this is not. Is this a daily chart? Yeah, we're looking at yesterday. By the right volume here, yeah. Not really. It's trying to come up. It looks okay, but it's in a tight pattern, so that looks okay. And I think that's confirming the action you're seeing in the bigger biotechs. What I noticed. Oh well, look out! Look out! For those of you who are asking, that's Ted Nugent. So, God, if you don't know who Ted Nugent is, you're really not an American, I think. But in any case, let's see, where are we? So you're seeing Biogen breaking out yesterday. Looks good, going higher. Let's see. CMG is another one we were looking at. Yesterday, you had a pocket pivot. Dr. K, there's another alert that went out, and the stock looked like it had reversed back to the upside, but it looks like it's kind of breaking down. How would you handle this now? Just get out?
Yeah, I mean, you know, you take a nibble, because sometimes what happens on earnings, the way the market sees earnings, is that the stock just will run on up out of there. So you might want to take a small piece of the position, which is why that alert went out today. But now that it's just reversing, and the volume's appreciable, you know, if you have a position, a small one, you might, you know, just sell it here because it could end up going all the way down to, you know, 350 or lower. It's tricky. Earnings day is always tricky because you're going to get a lot of tug of war going on, but it doesn't look good here. I don't like the way it looks.
Okay. Yeah, I don't really care. But the other thing is, this thing's a little bit sloppy. It's been trending upward. It's also kind of tired. I'd be looking at some newer things. Some other things that people have asked about. UA is trying to come up. You have this heavy volume, but you know, it's heavy volume without further price progress downward. So it looks like it washes out sellers. To me, you hold the 200-day moving average and you gap back above with the 65-day exponential here, and you're getting it back above the 50-day. So you're holding this pullback. Volume's drying up. This thing might try to make its way out of here. Most of the retail stocks have acted well, so it looks like it may try to come out of here. I don't know. We'll see what happens here. But that's like, you know, most of the retailers look okay, and there's not really too much bad in most cases. You know, like stocks like Lulu, and you're seeing some of these other ones. I noticed Ralph Lauren had a pocket pivot, I guess, through off the 10-day moving average here. You can see that, and went sideways, held the 10-day, and has moved higher. And you're seeing a lot of these. I think even Coach. Breaking out. They're gonna ask me about Nike today. Nike's just continuing higher. So I wouldn't be surprised. You know, even you see these Ulta Salon is kind of trying to hang in there after doing this sort of test of support. So I think, you know, UA probably will hold. People asked about Jazz. I think I'm not really too concerned about this reversal necessarily because it's on less volume than the prior day when it tried to break out. But you know, there was news on this day that Colbert Kravis Roberts, I think KKR, took a 19-point-something% position, and so I'm not sure what that means. But the stock is acting okay, and it seems to be holding. I would say for now the 20-day moving average just seems to be support, but it doesn't necessarily have to hold it. But it should hold the lows of this. We talked about this last week. how would you handle TSCO is another one we get asked. And it had a gap up, so how would you handle it? They announced earnings, so the news is out, so you got to sell on the news situation. I don't think that's really too uncommon. The question is, if you bought in here, how much underwater are you, or how much profit do you have, and where is your stop? Are you going to try and sit through this? Dr. K, any comments?
Well, again, here we have a potential tug-of-war situation going on. It was up, now it's down. The volume is quite appreciable. I would keep stops tight on this one as well. Tighter than normal, shall we say? And it looks like right now it's about to break below the a prior low in this sideways pattern that's formed. So you might get rid of half your position if it goes below, say, 79.
Right.
And then you sell your other half when it breaks below the low of the gap up day.
Right. Okay. We got racks breaking out today.
With no porosity, by the way, because porosity applies really to a stock that has gapped up, and then usually within the next just few days, it comes below the low of that low, and you can allow 1 to 2% if it's within 3 or 4 or 5 days of that gap up. But if we're talking, we're talking 3 weeks here, and it comes back down to that low of the gap up day, you sell it the moment it breaks below that low.
Let's see. Racks breaking out. I think this is good for the networkers in general. Racks and the F5, I think, is one of the stronger sectors. There's an article on IBD yesterday. It wasn't really all that big of a deal, but so far it's holding the 10-day. I'm looking for this thing to come out with some sort of pocket pivot, but otherwise you're just holding this with the low of this day being your guide for a stop. Notice that when Riverbed came out and got pummeled last week, you saw volume pick up, and it got support right at the 10-day and the lows of that gap up day here. So it looks fine, and I think that's probably going to try to go higher, but it could just go sideways for a period of time. Let's see. Save. I didn't get to that one. Spirit Airlines. I like this story. I like, you basically have this base on base. It came public here at $12, and you got a base here and another base. You shake out through the lows of this base, get everybody up. They did a secondary offering here, 11 million shares. It looks like it was fairly well absorbed. You got a series of pocket pivots. Now, this pocket pivot occurs kind of in a strange V shape, but it's not wedging really. You're getting some good upside volume, above average volume on the way up. So it's not a V-shaped wedge, but it does need to correct. So it pulls back here for a day or two, and then turns around and breaks up. Now, it wouldn't surprise me to see it kind of sputter along the 17 level or higher, but it's kind of an interesting name. This company is actually making a lot of money. You can check it out yourself as far as the numbers go. But I kind of like that in the shakeout through the lows. And it was a breakout yesterday. You could have bought, but you also could have bought these little pocket pivots, although it is a smaller stock. Let's see here. Got any questions here? Let's see. Let me ask you about Cree. We'll get to the metals in a second. I don't know. It's trying to bottom. We're not interested. String Doctor, somebody says. Yeah, that's one place I get strings from. And May, we talked about TSCO is one that everybody's talking about. We talked about that. Cephate is an interesting one. I played this move on the gap up from here to here, but I kind of blew it out yesterday because it just didn't have any momentum. This is viable using the low, but that's way down there, and I think it's probably going to have to pull in and go sideways for a little bit. So I was hoping you get some momentum through here, and it might start to rush to the upside based on this huge volume. Sometimes you'll get that happen. They'll go up 10-15% further. And that didn't happen here. So a lot of these biotechs, the smaller biotechs, seem to get some momentum, and then they kind of trickle out like biopharma. Same thing here, big gap up or big run up, and then it kind of trickles around, and then boom, another one, and then it kind of trickles back, and it just kind of will wear you out. What I noticed is that the bigger biotechs seem to be getting the steadier money flows. Celgene, Amgen. And Celgene, they're going to make something like $13 a share more, I think it is. Let me check that actually. Okay, everything decided to get slow here. No, I'm sorry, what am I saying? In 2015, $8 a share, so it's trading at 9 times that. Even right now, you're trading at 15 times forward estimates, and it's looking for $4.84 a share this year. So I wouldn't say it's an overvalued type of stock, but it was downgraded yesterday or a couple days ago on the basis of valuation. So again, that's all analysts know how to do. So that's how they let their bosses know that they're still working. They go out and tell you something is overvalued. But that's what I noticed. And so some of these smaller biotechs, Cepheid, that looks interesting. Biopharm looks interesting. Got a small position in that right now, 10%. So just kind of giving it some time. This ABMD, and then they do stuff like this. They look ugly and it turns around and goes up. Another one that did that was Salix. It looks ugly. It goes below the low, but notice it never closes below the low of this gap up day. So in something this thin, you might give it porosity, a couple of percent. Not sure that would stop you out here, but it just climbs back up towards the highs on very little volume. So kind of uneven, and when they start to look even, you think it's going to take off. It doesn't really. It kind of poops out. The ones that seem to be showing the better action here are stocks like Celgene and Biogen in the bigger techs. But I think it tells you that money is looking to get into this market in pretty much a big way, and so it will go after, especially in the biotech area, and I think it goes after the bigger stocks right now. That doesn't mean these other stocks don't work. I just think you have to deal with more volatility and give them more time. So Envision is one, or InventSense, sorry. Just pulling down. I think, Dr. K, give me your take on this one. My view is it just needs to build a base. This is all too soon. This looks okay. You had a pocket pivot here, but everybody sees this as a double top. But that's because a lot of people in the stock probably in here have a 70, maybe more % profit on this thing when it's up here. So they're going to come and blow it up. But I think you might go sideways. Still like the story.
Yeah,
Dr. K, take care.
The thing is, I would agree with that assessment, but there's one thing that that does tilt the odds in the stock's favor, and that is the gap up, the Bible gap up that occurred on earnings. It's a powerful company, a powerful story behind it, and that gap up really makes the stock look a lot more attractive to me here. This stock is having a low volume pullback in here, so if there's any people who like to buy on weakness, you could probably take a little nibble here if you haven't already bought the stock. Or this could be an interesting little pyramid point. Now, of course, it's an IPO, so it's going to be volatile, so expect a lot of volatility, but I wouldn't be surprised that the stock possibly moves to 18 over the next, say, week or two.
Yeah, I'm going to send this here. Let's see. I'm actually going to do an order here in my little Schwab account, buy a couple thousand shares here and see what happens.
Yeah, that's what I did earlier today, actually.
So there it is. You executed. It's trading pretty good right now. So even though 313,000 shares on the day, so it looks like they took it. Yeah. So I'm just testing that out. The thing about this is I'd like to own 50,000 shares, but I don't know if it trades enough. Keep going down. Let's go. The Tibex. I've shown you this one before. You had this real tight area in here on the weekly chart, and I thought that was. Let's see. Where are we? Where did my weekly chart go? Dr. K, what did you do with my weekly chart? There it is. You got real tight in here. We talked about this one before, and so you see this tightness right along the lows. A lot of times, to me, that because of this shakeout here, this is not a reverse flag. It's actually turning into a constructive pattern where it may be bottoming. So we've seen the pocket pivots confirming. You had this sort of pocket pivot move off the 10-day here. It's a little extended, but it just tells you it's coming off. And here you have another one through the 50-day, but see, it's extended, so it has to pull back, goes sideways, comes into the 10-day, and now here you start to pick up a pocket pivot right there. So it's working its way up. I wouldn't be surprised if this market continues to see this thing come up, form a handle, and then break out, and then that's when it really has its big price move. But so far, that's working off the lows, and you see that in the number of stocks. We've seen that in everybody always asks about Netflix, and Netflix is acting like it wants to go higher. And do you remember last week I was testing out a short position in here, and I ended up getting stopped out pretty quickly there when it got up through 120, and I'm glad I did because I think it closed like $2 or $3 higher. But I'm just testing that, and there are buyers there. I can tell you that much, and they're persistent. And every time that thing peels off, you'd see the bids come in, and you could feel it just pushing in your face if you're trying to short it, as I was. And so, use that information, turn around, and go long. It goes up, $7 the next day. So, but the bottom line is, I think a lot of people want to hate Netflix right now, and maybe you can hate the business model because it's going to streaming, which has I don't know, I've heard 9% profit margins, and and the DVD business, mail order business, or the mail business was closer to 30, I think. And so now one is the high profit business is declining, and the lower profit streaming is expanding rapidly. And so that's the argument that it's just a contracting business model, and that may or may not be true. So you never know. But right now, it's acting like it wants to go higher, and that's all I know. But would I play it if you want to use a stop that you can discern in here, the low of the gap up day 112.06, which is about 10% lower? I guess that would be it. But it just tells you that when you see strength like this, and these leading stocks coming off the lows, and we're seeing this in so many different places. I mean, even if you bring up the Cree example, Cree was these guys. What are they? This is a hot chip company, right, Dr. K? What is this? I used to know the stock well, and I just shoved it out of my brain. But there was a couple other stocks, and it was chip making technology for a while.
They're doing LED ICs and
LED
smart devices, things like that.
And so it's turning, and that looks sensitive. But you're seeing that in a lot of leaders from the past. But you want to focus on the ones that are making new highs, because I think that's where you have the better price moves. Let's see, I'm going to go through TDG going into earnings Tuesday. So again, what are we going to tell you? If you bought it down here, you got a decent cushion, so you could probably try and sit through. But again, you just have to assess whatever size position you have. What is the worst case situation? Does the stock break 20%? If you have a 1% position or a 10% position, it breaks 20%. It's going to cost you 2% to your portfolio. So if that's an issue for you, then you're in too big. If it's not, then you're fine. If you are like me and you want to have a 50% position, it goes in 20%, and you're down, 10% on the day, maybe you can't stomach that. So that's really what you're thinking about. But we can't tell you that the chart is telling you anything going into earnings, because you can go back in hindsight, look at 100 examples, and say, oh yeah, this stock had, 8 out of 10 stocks went higher when they showed this particular pocket pivot or pattern or whatever. But if you own the 2 out of 10 that didn't, you get slaughtered. So it's real nice in hindsight, but I don't think from a practical standpoint ahead of time you can do much more than manage your risk. And I think it reflects the fact that people, what do you think of the stock going into earnings? Well, there's an underlying search for certainty, and I think a lot of people, and we talked about this many times, human beings are not psychologically wired to be investors. I just know that for a fact, being one myself, and now that Dr. K and I have been doing virtueofselfishinvesting.com for about 1.5 years, I think we're getting on, you see a lot of the questions that come in, and you begin to understand what's going on in the minds of people. And I think what we're doing is very unique in that as we're going forward, we're using this database of information about the fears, the trepidations, the concerns of people when it comes to just normal day-to-day people trying to trade and invest their money, and you begin to understand their psychological deficiencies. And so that gives us the opportunity to figure out ways to address it and help people train themselves out of that. And you see this is one of them, the uncertainty going into earnings. Well, like I said, you don't know anything for sure, and there's no way you can determine for 100% with 100% certainty that something bad isn't going to happen. So you just have to get yourself in a position where you can handle if something happens. Now, if you have a nice profit cushion in the stock, then go for it. We certainly did that when we were at O'Neill, and we had big stocks running up hugely, like Apple 2004. Going into earnings in January 2005, you just held it. And I had 1 million shares at the time. You just held it, and you didn't worry about it because you had cushion. So that's really the bottom line. But it does reflect a need on people, or by people rather, to have certainty in the market. And I think you have to understand that there is none. There is no certainty. It doesn't exist. It's like the perfect marriage, okay? It does not exist. It's an ideal that a lot of people strive for in the market, but I think they're wasting their time. Okay, and I think it's a foolish waste of time. You see guys trying to work on indicators and they're going to tell you which follow-through day is going to give you the highest probability of making money. You know what? Just give me a follow-through day, and then give me a big stock I can jump on, jack up a big position in, and then run with it. That's all I need. Last year we were up because we had silver. I didn't need to know whether this follow-through or that follow-through day had a higher probability of working based on some of these silly statistical study. That's really not relevant, because the essence of the study and what makes it irrelevant is that it's searching for certainty rather than searching for probabilities and then trying to manage risk into the search for probabilities. And I think that's what Dr. K's model does to to a very large degree, and you have the things that we term the fail-safe, which is basically something that other models don't have where they get locked in. So all you can do is allow for uncertainty by proper risk management. That's all you can do. And then try to put yourself in a position to benefit from luck. We were lucky last year in the sense that we rode silver, and we were up, okay, pretty good, 24% last year. Could have been up more, 40, maybe a little more. But we had several bad signals, as you all know, in October going into the end of the year. So, but the bottom line is, were we just lucky when that move occurred in silver, when it went straight from 30-something, low 30s, right up to 50? And, I looked like a genius going on Fox, telling them it was going to 50, and then when it went to 50, telling them I sold it there, and rah, rah, rah. But what really happened, we followed our rules, and we got into silver when it started a trend. We didn't know it was going to start that kind of parabolic trend, but we made our own luck, and that's really what it's all about, just putting yourself in a position to benefit from a situation that starts to become, well, for lack of a better word, a little bit lucky. And I think that's really what it's about. You will never eliminate uncertainty. So try to just understand that, and try to internalize that concept. You will never, never have certainty in the market. And any endeavor to achieve that is a fruitless one. Dr. K, any additional comments?
Yeah, the people who are lucky appear that way, but they're lucky because they're prepared. They're waiting, and they're patient, and they're waiting for that next trade of a lifetime to come along, and that kind of trade will come along more often than one thinks. And in 2011, which is probably one of the most challenging years on record, there was silver, there was gold, there were a couple stocks, and if you hit the right ones, like those, then it made all the difference to your P&L for the whole year. And in better years, the chance of a lifetime comes along probably every few weeks. So yeah, being vigilant and staying in focus allows that luck to enter your life. So in other words, it really isn't anything to do with luck. It's just that based on probability, there will be some vehicle out there that is tradable that will have a very nice uptrend that you can capitalize on.
Yeah. We actually talk about playing silver in 2011 in the new book in one of the chapters where we're doing a post-mortem of the whole year and looking at all our trades and pretty much dissecting it. It's fascinating to see how many stupid mistakes we made. And I mean, when I look at them now, I'm sitting there thinking, boy, you guys think you're that smart, okay. I mean, you look at even the silver move. When this thing gapped down here, for example, you know what day that was? That was the day of the Japanese earthquake. And so we thought, okay, we added to our position here. We had bought here, and it went up, and we added here, and we added here, and then we sold here because of a weak volume wedge up into the 10-day. And then we started buying back here. So we were actually in and out as it was getting some momentum, and then we really got heavy and boom, boom, boom all the way up. We're just averaging up, and it's just running, and then we sold right into this peak here. Not this peak, but this peak. And as Baruch said, I became wealthy by selling too soon. In this case, just a little bit, but it was good enough. We weren't going to be pigs. And that's all it took. So, silver right now, everybody wants to know what's going on with silver, but there's nothing to know other than that you're coming up here, so you have a little bit of congestion from this area here. You run up fast, so you get 12 out of 15 days up in a row, or better right here, and you're holding. The 10-day moving average is catching up. So it might need to go sideways. 10-day catches up, and it's pushing towards the 200-day. I think you're headed for the 200-day. It looks that way. And we'll just see how this goes. But for now, I can't say that the trade looks bad. And this sort of increased volume outside reversal day, don't get hung up on those because you'll see them often in these moves. Like here's one right here. Like, oh my God, that's the end of the run. You have the gap down. Oh my God, that's the end of the run. You have this break here on heavy volume. Oh my God, that's the end of the run. You could here, right here, just before it goes really parabolic, you get 2 heavy days of selling. Oh my God, that's the end of the run. It's so you just got to stick to certain stops because it'll look funky on some days, and these things don't really behave that way. So for now, if you own it up in here, what's your stop, Dr. K?
Well, right now I'm going to be using first of all, SLV is better. I prefer 1x ETFs as my selling guide. So with SLV, essentially, if it comes back down into its basing pattern below the 50-day, then it means there's something not quite right. Maybe there's something. Maybe QE is not being printed as fast as we thought. But right now, all systems are go.
Right, and we started entering in here, and that's where you're starting to come in on silver right there. And so that's the only place I've seen to buy. If you think pocket pivots off 65-day exponential moving averages are valid, then here's another place to buy. I actually did add to my position there, um, and we'll see how that goes. So far, so good. But for that piece of the position, see what I would use is probably the 65-day as my stop, and then the rest of it down here. That's what I'm doing. So you can do it any way you want, but I wouldn't expect it to hold the 10-day moving average necessarily. So what I would watch for is the 10-day moving average as a reference point for a potential a pocket pivot that would take you up through up to highs. But right now you're working over this area, so from here up to 34, kind of resistance pushing up towards the 200-day. Maybe the 200-day catches up, and then this all turns into a big resistance area. But we'll see. My guess is when silver really starts to move, it's going to do so. On these days, you get scared out, and you're going to miss the big jacks when they occur. So be careful with that. Let's see. We looked at Lulu. Yeah, it looks okay. It's still acting okay. Everybody still asks about TSCO. So my guess is you'll see it hold. I would watch when it approaches this low. Maybe it becomes viable on that pullback if you like to do that sort of thing, because then you have a real quick reference point for a stop. But I'd watch it coming into the 20-day. A lot of people do watch the 20-day. We don't really watch it that much. I use it sometimes, but only if the stock tends to show that it holds the 20-day. Because if you all recall, last year, I found that silver did a pretty good job of holding the 20-day on this pullback here. But notice it did hold the 10-day most of the way. But the first move that it had coming up through the 20 area up to 30, it held the 20-day moving average very well all the way up. So in cases where you see that occur, and that's its character, you'll see that. But it's very rare, and for the most part, you can usually operate on the basis of the 10-day and the 50-day is usually sufficient. Dr. you have any comment on that?
Not. I think you've pretty much covered it.
All right. IACI, there's not much to know here. Bible gap up the low is 44.37. It's holding up okay. We told you about the pocket pivot here. There's another little teeny tiny one here. I don't know. Which one did we tell them about, Dr. Was it this one or this one? I don't know, one of those two. But
We told about it on, I think it was the January 30th, on that first pocket pivot.
30th. So it'd be right there. Yeah, so it's breaking out kind of too, and we're trying to. And there you have a guy. It's acting well. I've always thought IACI, they have a lot of properties, and when you look at the fundamentals, it's much better than anything like LinkedIn, but this stock never seems to really get anything going. But you had a 169% increase in earnings, and that's up from 70% from last year. Sales are accelerating, 22, 23, 25, 32% over the last 4 quarters. And earnings at triple digits last quarter up 70%. But the numbers are good. These are 45 cents here, 18 times estimates. I think if money needs to move into the market, and this is a big, stable internet play, and I think it works pretty well. So, so if you own it, there's nothing to do now but hang out. Move down the list here. Zynga. Oh, they came public. I don't know. It's coming around. What do you think, Dr. K?
Well,
you know what's going on. You can almost guess this one. You got LinkedIn moving. You got Zynga moving. It's all Facebook. So it's kind of an emotional reaction. I don't know. How do you come after this? You take it on its face. There was a pocket pivot, I guess you could say. Here maybe, I guess, but it's a junk stock as far as I'm concerned.
Then the earnings are not robust at all. In fact, the last 2 quarters they were down.
But it's the IPO U-turn, Dr. K.
Industry group ranking is 192. It's just there's a lot of flaws in this, and it's an IPO, so there's a lot of risk to take on. That I think unnecessary risk in playing a name like this. It might work what it is, but again, there's the risk reward is not in one's favor in this kind of thing.
You got LinkedIn's doing the same thing. I bet Groupon's moving too, right? Yeah. Gee, I wonder how. Gonna guess that one, but I don't know. These are emotional rallies, but interesting action. But you know what it's all about, so there's no real reason to. I think just go for the best names right now with the best earnings and sales, and that's all you're looking for. So, alrighty then. Let's see, where are we? Let's look at some more stocks. What about cores? Probably no reason to talk about it because you have the pocket pivot here and it just goes higher. There's nothing else to do. There's a secondary pocket pivot right here, Dr. K. Yeah. Right. So it's just continuing higher. So nice momentum on this guy. not much to say other than it acts well, and that's constructive. Let's go down. SX, yeah, I don't know. We never talked about this one. I don't know. It's okay, but I don't know. Big gap. No, there are better names, I think. So I haven't really liked healthcare names. I was noticing AH is trying to come around. You get this pocket pivot here, but it's kind of at an uneven pass. Trying to break out here at reverses, but and it's pretty volatile. It's tightening up a little bit, getting a little more coherent, but not really into that area. So I think technology is
It's a better area, especially with Facebook coming out. I think Facebook could really spur the whole group forward.
Yeah. LQDT was yesterday a negative sign for month. Oh wait, no. Wait. Was LQDT okay to buy yesterday from the way it reversed back up? What do you think, Dr. Well, obviously it's up today, so I guess it was.
I mean, I love to see a pattern where it goes down and it comes all the way back up on volume on an earnings day, and that's an example of tug of war going on. As you can see, there's a lot of risk in playing this kind of position, because you'd have to be sitting all the way down to 31, and you probably wouldn't. You'd probably sell before it hit 31, but then it finishes the day at the peak. So that's a constructive pattern. I'm looking at the overall pattern. It did that apparently before. On December 6th. That makes me nervous. I don't like seeing these kinds of, I don't know how markets are made in this stock, but it makes me nervous to see this kind of sloppy trading action going on. That increases the risk in being in this type of stock.
Yeah, definitely. Was yesterday a negative sign for monster stock AL? AL is not a monster stock. I hope you mean that facetiously, because it trades 110,000, so on average 110,000 shares a day, so this thing is like nothing. You had the pocket pivot here, but that's about it. It's just kind of trending higher. But these are one of these slow stocks that just they're little stocks, and they'll tend to just truck along and kind of wear you out, and then eventually have some kind of big move. But a lot of times it's air leasing aircraft leasing looks kind of boring, but so far the stock is working minutely, but it's too thin for me. So I don't, if you can trade a couple hundred shares in this thing, maybe you're okay, but not into it. What's Russia?
Earnings and sales on AL are very robust. It's just that the pattern is it's a low pattern. It's still sometimes these things will wake up, and right now the relative strength has been pretty poor on this, but so far the trade's working if anyone bought it on those prior pocket pivots, and the industry group ranking is 10, so it's got a lot of things in its favor. But again, there's the pocket pivots it's had. It's not really catching fire. You want to see more action in the stock, and if this market keeps trending higher, I would probably ditch AL if you hold it in your portfolio for something that's going to have more price improvement.
Yeah, I agree. Here's a question. When it comes to IPOs, should one care about looming insider lockup expirations? I tell the story of, there's an answer to this. I tell the story of Krispy Kreme donuts. And you know what? Let me pull up a weekly chart here. Krispy Kreme donuts. Which I won't be eating anymore. In fact, I found out recently I'm allergic to wheat. So, interestingly. So donuts are definitely out. But by the way, if anybody has any really good gluten-free recipes, send them along. So, I don't really find it to be too much of an adjustment, but it is interesting to find that out at my age. So all these years, my nervous system probably just allergic reaction to wheat. Anyways, okay, here's Krispy Kreme. Stock came public, ran up, formed this big base. Right here, I remember hedge fund guys who were clients at O'Neill, they were all shorting Krispy Kreme because the stock was coming off of IPO lockup, and so the insiders would be dumping all their shares, right? And they'd just be throwing them out the window, right? So all these guys got short, and the stock turned around, broke out, and went higher, and reamed them, and the stock continued higher until it finally topped out in late 2001. So that's what that all means. Don't pay any attention to expirations. Just watch the price volume action. If some stop or some indication of deleterious action is evident in the stock that you own after the lockup, then maybe it is a factor. But you only sell it on that basis alone, because that's the only way you know whether the lockup expiration is a factor. So a lot of times, as you see with this example of Krispy Kreme donuts back in 2002, that's not the case. So I ended up with a dozen or more stocks based on your pocket pivot notifications. Can you elaborate on how to become more concentrated on the best performers? Go ahead, Dr. K.
Well, it's a dynamic system. So, for instance, I had a question about September 2006 as well as March 1996. And these were periods where it was very clear to me that the window of opportunity was opening up quite wide. And the reason is simply because leading stocks were issuing pivot buy points. Now, the names of the stocks is not really, it's good to know, but it's not essential to know which exact stocks there were, because in every market cycle, when that window starts to open, the way you know it's opening quite fully is based on your basically gauge. You have to have a 30,000-foot gauge of the market. So that means you have your list of leading stocks, and as you start to see appreciable numbers of those leading stocks issuing buy points and coming out of constructive basing patterns, well, that's your signal. I mean, that sort of circumstance is very rare. And when it does happen in market history, that is when the ducks are all in a row. And that happened in March of 1996 as well as September of 2006. iOmega is one of the famous examples from March of 96. But there were
Is it still around? Is it still around?
I think it is, actually.
It's trying to pull it out. It looks like, no, I don't think so.
They were probably either bought out.
How about OBTI? Are they still around? Yeah.
So yeah, the essence is to run your screens every day, and that gives you a very fine-tuned tactile sense of what is going on in the internals of the market. You'll get a good feel for how many of these fundamentals are starting to really shape up. Leading stocks, that is, are starting to shape up, and when they start to issue trigger buy points, then that's your signal. Now, there's one challenge to this. The question is, do you start buying when you start seeing the first pivot points being issued, or do you wait until you start seeing a whole group? And that all comes down to your trading personality. I mean, if you just wait for the biggest windows to open, you actually would still do quite fine, and you'd probably save yourself some grief on when the window only opens a little bit and then shuts again. And that's certainly been the case in the last 12 years. The windows have generally not been open. They open for maybe a month or two, and then they close again. And then the ones that actually are open for 3 months or longer, well, that would be September of September of 2006. I think there was a couple months in 2007. But these windows have been very far and few between. And what we're seeing this year is, finally, I would have to say, this is the first time since probably September 1st, 2010, that the window has opened as it has, with a lot of quality names coming forward and issuing buy points. So we're in a good phase right now from everything that all the things that matter are saying green light, green light.
Okay. Let's see. Some more questions. Which of these stocks, these many stocks we are looking at, do you see as the most promising from a percentage gain and risk reward standpoint? I don't know. I just kind of weed them down as they go along. So, I mean, right now, what are some of the better stocks? You know, F5, MNST, Biogen, Silver's acting well, Tibex, RATs today, MA's acting well. I mean, you go with any of those stocks, and you may start with 4, 5, 6 positions, and you'll whittle down to maybe 2 to 3 or 4 or 5. Dr. K can run 10 positions. I'll run maybe 3 to 4, maybe sometimes 5, and sometimes 1 or 2. But it's kind of you get a sense of the market pushing these things along, and which ones, like Bill O'Neill would tell me, look around and ask yourself the question, where's money flowing in? What's been moving? It doesn't have to be moving on any particular day, but what's been moving? Where have you seen big volume going into? That's what the institutions are buying. And a lot of times when they're big stocks, they're not, institutions do not buy on one day. They consistently and continuously buy, and that's what drives these things higher. And so that's what you're trying to look for. It's a very qualitative sort of thing, but you can own different stocks in a bull market and still make a ton of money. Bill O'Neill owned AOL in '99 or '98. I had Schwab and made a lot of money. I think Bill also owned Lee Freestone owned Qualcomm in '99. I owned things like VeriSign, Oracle, and I made a ton of money, and so did Lee. So it's not really a matter of finding one or two stocks and that's it. There's probably a handful of stocks that will all do well, and it's really more a question not necessarily of the stock itself, as long as it has a decent move. It's more a question of how you handle it, and so that's really what you have to focus on. You never really get too concerned about whether you have the stock. Sometimes there are several the stocks to have.
Yeah, in good market phases where the window's open, there's going to be more than a handful, and I traditionally will hold between 12 to 16 names in such a period. And if you go back to those open windows, I was fully margined within a matter of days, holding maybe 14 or 15 names. And when the new name breaks out or issues a pocket pivot, and I'm completely maxed out on my buying power, I'll look at my portfolio and sell the weak link. Whatever is the weakest stock in that portfolio will be pitched to make room for the new one. And so it's a dynamic process where you're continuously force-feeding money into the strongest names.
Yeah, and the market tells you that. And so, not just on a single day basis, but on a period of a few days or week, you see where that's happening. People ask about STB. This breakout recently. Remember, I remember stock Riverbed Technologies. Excuse me, that was my publicist calling, probably about the radio thing. 1 second here.
I'll answer this. This was a supplementary question about what types of breakouts that worked in the 90s have not worked over the last 12 years, because, well, naturally the last 12 years haven't been the 90s. Essentially, most forms of breakouts just don't have that same forward momentum that they had in the 90s. I mean, the industry group favorites, the dot-coms, obviously, leaders in retail, leading stocks that had good price formations would break out and usually would make big moves forward, assuming the market, of course, was on their side. And for a good part of the 1990s, we're in a nice uptrend. So in the last several years, on the other hand, we've had compressed rallies, reluctant grinding rallies. So what happens is the stock breaks out, and then the market doesn't carry forward. In other words, the market might go 3 steps forward, 2.5 steps back, taking the breakdown right back into the base, meaning that you probably are forced to sell at a loss. Thus, pocket pivots, by virtue of necessity, really, when I was doing my stock research studies in 2005, they just sprung out, and they held up under the scrutiny of going back many market cycles, realizing that they would actually work in the 90s, and they would also work in compressed markets, in getting in early and not having to sit on dead money, because there are often signs that the stock is going to be making a move higher.
Anyways, as I was saying, Riverbed in 2010 when it broke out, it was a cheap stock. This is actually, I think, 2 for 1 or 3 for 2, I forget. But it broke out, or this is adjusted for 2 for 1, I think, or 3 for 2. I think it's 2 for 1. Anyways, that's not really the issue. You had a nice big breakout. Notice I pulled all the way back and formed this little V-shaped cup and handle. Pocket pivots coming up and out of here. So SWI kind of reminds me a little bit of that, in that you have this big breakout here, gaps out, runs up, big volume breakout, and here you have the pullback. The only difference is on SWI you never saw the big volume off the lows on the support. Maybe a little bit in here, but some pocket pivots. Here's one coming up. We pointed this one out, and after that you don't really have anything coming off the 10-day moving average, but it looks like it's a similar sort of situation, and maybe that's how it pans out. If you're up on the stock, you have a cushion, you have to decide what you're willing to sit through in a worst case scenario. But the cloud seems to be making a comeback of sorts, and so I would probably sit if I bought in here or bought this pocket pivot, you might be okay. I don't see the thing breaking down, but again, you have to decide. If it breaks down 20% and it goes down to 25 or 26 down here, and you have a 10% position, you're going to get hit for 2%. So you have to just figure it out that way. There's no, like I said, there's no certainty. We're getting towards the end of the hour here. Actually, it's 9 a.m. now. Alexion's still acting fine. It's buy bought the 20-day, and I think I told you this that last week that was the case. You run up, pull back, looks normal. Again, you probably get bored out of stock here, right? But this turns around, goes higher, and that's probably what Monster's going to end up doing eventually. You get bored here, and it's going to go higher. LVS, people ask, do I like LVS? Does it matter whether I like it or not? All I know is you get this nice move here. It's trying to come out. The only issue I'd have with LVS is that this is a climax top, and it's gone sideways all this period of time. You don't really see any tightness in the weekly pattern. So, maybe it's going to try and come out of here, maybe not. But I don't know. For my money, there's better stocks to play. How many tractors does Dr. K have on his virtual farm? I didn't know you had a virtual farm, Dr. K.
There's that virtual farming game. That's actually one that I've stayed away from because it looks a bit addictive.
Oh, here's another question. This is a good one, and here's one I think underlies a need for certainty. Historically, from your studies, do stocks that hit all-time highs perform better than 52-week or 2 to 3 year highs? Yes, and you should buy them and load them up, back up your truck. I think any stock breaking out to a 52-week high is good enough. I don't, if they've been in a long basing pattern as a prior leader and it's coming out of a big base pattern, sometimes that can work, but I would just take it on the present price volume action. And if you're making new highs, that's fine. All-time highs, it's not necessarily a guarantee that the stock's going to move a certain percentage higher or anything. Have you ever found anything like that to be the case, Dr. K?
Yeah, actually, I've done studies on this. 12 to 18 months is kind of your zone. If the stock has been trading for at least 12 to 18 months, you're okay. There were some cases where, interestingly, if 1.5 years was kind of the all-clear point, as opposed to 1 year. But I'd say it's a gray zone between 12 to 18 months new high. You're fine.
Okay. Somebody says, would you sax something about FL breakout on low volume? I don't have a sax. I have a guitar. Maybe I can guitar something about FL breakout on low volume. What is FL? Foot Locker. I don't know. It's a low volume breakout, so don't like it. I loaded up on UA on this pullback, so. I got slice and dice moving in and out of TNA as a market direction model movement between buy, cash, and sell signals during 2011. Thus, I was scared and didn't go all in on the last buy signal. Should have, I guess. Huh. Well, I don't know. If you're guessing, then I guess you should guess that you should have. Yeah, okay. That's probably an answer my trader would give me. Dr. K, what would you say? And, it's a valid question.
The essence is that to do well in the market, you have to be able to take strings of little losses, and little is relative, of course. If you're playing a 3 times ETF that's very volatile, then a little loss might be 8% each time. And if you had 5 little losses in a row, that's going to be 40% or more of your account. On the other hand, a big win on that kind of an ETF is probably going to be 40 to 50% for one true trade. So again, if you're able to take that kind of 8% or 5, 6, 7, 8% loss each time, 5 times in a row, and stick around for the big win, which is much greater than that, over time you will come out ahead based on how the model functions. But you have to withstand a lot of volatility of your own account, and you have to ask yourself if you're really cut out for that. If you're not, then tailor your position size to suit your risk tolerance level. With the NASDAQ composite, the model tends to do less than 2% loss on false signals, and on true signals it more than makes up for strings of losses. That's always been the rhythm of the model. And so you should position size knowing that you could get a string of 5 in a row false signals, or even more. I mean, in 2007, the model I think had 8 in a row, or even more than that were all false. But the key was that the losses were kept small, so that when the model finally hit a true signal, the losses were more than made up. And that's how the models managed to do about 33% annually using the NASDAQ composite, which is equivalent to 1 times ETF. Annually since 1974. So just always keep that in mind. When you start putting your own money into this, assume the worst. Assume, let's say, what happens if you did get, several false signals in a row? Would you be able to deal with that? And position size accordingly to where you can deal with that and it's not going to upset your psychology.
Good advice. Okay. O'Neill says that when a stock is 5% from buy point, it is extended. What is the rule on a pocket pivot? When do you stop chasing it?
Yeah, it's 5% is a rough rule of thumb that I think is a good sound number. There are going to be exceptional cases. For instance, if the stock is not very volatile, it's relatively calm, then 3 or 4% could be extended relative to the chart pattern. On the other hand, if the stock is highly aggressive, high relative strength, and a volatile pattern, but a great story, then you might buy it even if it's up 6% above the 10-day moving average.
Okay, getting some other questions. I know we're on a buy signal, but the indexes seem to be grinding sideways the last 2 weeks. Any suggestions on how to navigate this? Yeah, just focus on your stocks. Why does, that index can go sideways, stocks go higher, and stocks have been going higher. So just focus on stocks. Any plans on bringing buy-sell signals regarding the TVIX? No, I don't think so.
Yeah, that's a work in progress. I have really not seen a proper risk-reward system for TVIX as of yet. Now, if it does change, of course, I'm going to share it with all the members. But so far, there's just way too much risk in dealing with TVIX as an instrument. I'm still tracking how the model does relative to TVIX, but so far, I'm not really seeing any proper solutions. I mean, just as members will have seen, in 5 signals issued since August 2nd, if you played every single one, you'd be up something like 562%. However, the 5 following signals that were false that ensued, you would have had a drawdown something like in the neighborhood of 50, 57, 58%. Of course, you'd still be up, but I mean, these are crazy numbers. And I mean, I suppose one possibility is if you're going to play TVIX, play with 1/4 the size of a normal position, so that no matter what it does, you're not going to get hurt.
Yeah. Somebody's asking, are questions you are answering typed in here? Yes, that would be the where it says questions. You basically type in whatever you want to ask us. We're getting that we're pretty much done, I think. It's just did we miss any stocks? Anybody want to hit us one last time? But we're just sitting, operating on the basis of the rules. Not much to do. How do you navigate environments where the indexes, well, the indexes aren't really choppy. I mean, they just continue to go higher. Here they were going this way, but in the meantime, during this period, you had stocks like MNST running up here. It pulled back when the market started to pull back right in here. But other than that, there's not that much correlation on a day-to-day basis necessarily between leading stocks and what the market itself is doing per se. But I certainly wouldn't base anything on that. If the market's going sideways, leading stocks are continuing higher. That's usually the hallmark of a leading stock. So, anyways, yeah, too bad I don't have my lecture chart. Maybe we'll bring that next time, all you Ted Nugent fans. But yeah, I love on a bad trading day, turning up the old amp up to 10 and playing something like Cat Scratch Fever is somewhat of a release, and that is one of my favorite Ted Nugent songs. Sounds great on electric guitar too, very screechy. Anyways, don't miss Lulu. Did I miss? We talked about Lulu, but it's just acting fine. There's nothing really to consider here. Came up off the 10-day moving average. I think that was a little pocket pivot, wasn't it? Yeah. I think we told you about it, and it's just kind of trucking its way higher. So everything looks okay. Things for now look fine. Gold and silver are acting fine. And I think there's really not too much to think here, and you could become a victim of thinking too much if you're not careful. So if you want to think about anything, think about not thinking. So that's what I would say. Don't you say so, Dr. K?
Those are the magic words.
Yeah, so on that note, you guys, thanks for showing up. Thanks for putting up with my lousy guitar playing. And we'll catch you next time. So take care. Bye-bye.
So long, everybody.